Ladies and gentlemen, welcome to Kohler Group's Expansion into China webinar series. This is part 2 of 10 webinar sessions, and the title of today's presentation is An Inside Track to Importing Goods into China. Identifying the market in China can often be the easy part. Getting your goods into China can prove a lot more challenging. Once you have a company in China or an agent in place to move your goods into the region, you will have to deal with Chinese customs. If you're operating for the first time, then you need the inside track on how the system works. In this webinar, I'm very pleased to have our speaker, Mr. Andy Clayton, CEO of LNP China, who will be providing us insights and covering topics such as HS codes, ports, customs clearance agents, getting the documentation right, and understanding the timing. Andy runs LNP China, which manages a back office functions including import-export from Western firms in China. They've managed over 25 million pounds of sales for Western companies into China, have been operating for over 9 years. So I'm very pleased to have Andy participating in today's webinar session. Before we begin today's webinar, I just want to make sure that our sound system is functioning properly. If you can hear me, then please do click on the hand button in the control panel to allow me to know that the sound system is functioning. Please note that if you are using your microphone and speakers on the control panel and there is instability with your internet line, then the only other solution would be to go to the audio section of your control panel and switch to telephone and dial in. That will give you the opportunity to then listen in to the presentation. Alternatively, if the line isn't stable, please note we are recording this webinar session and it will be uploaded to Kohler Group's YouTube channel for listening at a later stage. As is typical with our webinar series, we do encourage and promote our attendees to submit questions and comments inside the questions section of the control panel. Please don't be shy. Andy and I are looking to have an interactive Q&A session at the end, and we hope you do submit your queries throughout his presentation, which will take approximately 40 to 45 minutes. It's always lovely to see new registrants and new attendees at Kohler Group's webinar series. For those of you that are new and unfamiliar to who we are, allow me to provide you with a brief introduction. Kohler Group, a CSC company, provides a wide range of market entry consulting, incorporation, tax, accounting, and human resource services to organizations that are looking to enter as well as expand in the Asian region. We have over 120 professionals that are located throughout our 10 offices in the region. Our main objective is to create tailor-made solutions for small, medium-sized companies as well as multinationals for their entry and expansion into the region. A little bit about myself. My name is Christina Kohler-Colucci and I'm a director at Kohler Group. I've been with the firm for over 13 years when I first relocated to Shanghai to open our first China office. Since that time, I've expanded our operations within China to having 8 offices and over 60 employees. I've been assisting foreign investors with their market entry, their expansion, and unfortunately, their liquidations from the Chinese market. I'm co-author of Kohler Group's monthly magazine, ChinaInvest.biz, which if you're interested in subscribing to, can be done so on our homepage. So without further ado, I'm going to give the microphone and the control of Andy's presentation to him, and he will be able to then begin his presentation. Andy?
Hi, good morning, Christina. Thank you very much. Is that all coming up? Can you see my screen clearly now?
Yes, perfectly.
Lovely. Thank you very much indeed. I'm very pleased this morning to have the chance to share with everyone our experiences on importing goods into China. what we do is we are experts in the management of company operations in China. So we're agents for numerous Western brands that are operating in China. As such, we are at the front line of helping companies with solutions like importing goods in and out of the country. We've been doing this for about 9 years now, so we have a lot of experience. And over time, we've also been able to track and observe some of the changes in the Chinese system. Today, really what I hope the take-home message for you is that importing goods into China, although challenging, is something that's doable. It's a technical area that requires a little bit of learning and some expertise, but it's something that any company can do with the right kind of help and assistance. In terms of the kind of companies that I'm talking to or the situations that this will be relevant to, it's going to be mostly around if you have your own or you have control over some kind of an entity into China that is looking to import goods. I'm going to focus more on importing into China because exporting out of China relatively is much easier to do. Most of the challenges are in imports. So yeah, if you have an entity that you need to manage that is involved in importing goods into China. So this is going to be particularly specific if you're in a B2B goods sales situation. A couple of brief words about myself. I've lived and worked in China for a long time, since the late 90s. I myself actually live in the UK these days, but our team are based out in China. We have our main offices in Beijing, and we have an office in Shanghai. We've been doing this for about 9 years, and we serve clients in a wide range of industries selling their goods into China. Also, a little word on the background images. This is our marketing department's clever idea a while ago. These are all some of the main ports of China. I can't always remember which one is which. This one I think is Tianjin, which is where a lot of our goods come in and out. But the first thing I'm going to talk about is around the art of choosing the right HS codes in China. Now, I'm sure you're familiar with the HS code system, the harmonized system whereby each country has got the same set of codes that are used to identify goods. When we start working with new clients, we ask them to provide a bunch of information around their goods, including the HS codes that they would have used in other countries. But we also ask for product descriptions and product photographs. And the reason for that is that the HS code that you use in China may not always be the same one that you'd use elsewhere. There can sometimes be some flexibility in HS codes. For example, often there is a category within HS codes which is other within a certain product category. And there may be advantages in terms of tax rates or documentations of picking one HS code over another. However, this is an area that you need to be quite careful in. The customs are increasingly careful about people abusing the HS code system and bringing stuff in on the false HS codes. So there is a bit of a skill and an art to picking the right HS codes to bring goods in. And usually the best people to do that are import agents that have experience working in your product category. Now, before I go any further, if you're at the stage of looking to expand your market in China, I would suggest that one of the very first things that you do is to confirm this issue. For example, recently we were commissioned by a China-based company that had reached an agreement with a UK brand to bring in a certain type of drink into China. And these guys had spent months and months, a good long time, negotiating exclusivity deals and agencies and the whole PR and marketing plan. But no one at any point had actually checked what HS codes they would use and whether that was an HS code that could be brought into China until they commissioned us. And it took us about 5 minutes to figure out, along with a couple of import agents, actually this particular goods contained an ingredient that was restricted. So it's very likely that these guys are just not going to have any means to bring their product into China. So I know it sounds like an obvious point, but even guys that have been operating and working in China for a long time, that have done difficult product categories themselves, often miss this one. And the point to remember is every category is different. And by category, I don't mean, vehicles. I mean very, very specific product categories. For example, we do quite a lot of work in food and beverage, and you would be amazed how specific the rules go in terms of what can and can't be brought into the country. And like I say, it can be sometimes down to a specific ingredient in the products.
Andy,
Next up,
Andy, if you don't mind, let me just bring some questions in based on that slide. You mentioned you know, the importance of the HS code and just for the matter of bringing in the goods. If a client or a company chooses the wrong HS code, what happens? Are there penalties that are given by the customs bureaus? Are the goods halted at customs? Are they shipped back? What usually is the consequence?
yeah, that's a great question. And the answer is a little bit, it depends. What you'll find with customs is there's quite a degree of variation in terms of how they execute rules, both across different ports, and also partly depending on who the customs clearance agent is, and sometimes there can be a level of relationship there. We have had experience in the past where customs have said, you know, we think you've used the wrong code for this, and it's simply been a question of changing the code. And then, you know, if the other code, for example, had a higher tax rate, simply paying the difference on the tax, and then the goods can come in. However, if they suspect that there is deliberate or repeated abuse of HS codes, then absolutely they will fine and they will make penalties, and they'll have goods returned, even to the point of revoking the import license of the importing company. Now, obviously, we haven't experienced that, but we're aware of cases where that sort of thing has happened.
Andy, apologies, but I just have one attendee who has asked a question, which is a rather basic question, which obviously we both didn't realize. What is an HS code?
So HS code stands for Harmonized System. It's a global system that all the customs bureaus of the world use. It is a common means of categorizing it's basically all of humanity's creation. You know, all the goods that are produced around the world fit into very detailed and specific categories. It's typically 8 to 9 figures long, and so it'll be something like, you know, dairy, milk, raw milk, unpasteurized, for example. It's down to a sort of very specific level of a particular good or commodity. So when you're going into a new market, you can provide customs in that country with the same HS code that we'd use in other countries, and they will know immediately what the goods are. But the point I was making is that in China, if you just automatically use the HS codes that you've used elsewhere, then sometimes you run the risk of it being the wrong product category that they use in China, because sometimes they have a different interpretation, or you may be missing an opportunity for using a product category that was either slightly lower tax rates or required less onerous documentation. And the best people to check which HS code to use is an import agent that has actually cleared customs for your product category in the past. And they'll tell you, yeah, this code works or that code doesn't.
Thanks, Andy.
Okay. So a related point to this, when you're bringing your goods in, you need to declare a price that you're actually going to bring the goods in at point of import. Obviously, this is going to be different to your sales price in China, but there is a relationship between the two. Now, some of the key considerations in this come down really to your cash flow planning in China. So if you have a WFOE that is going to be a cost center, then you're going to have to make sure that you've got enough cash flow in the business to capitalize it, in which case you might choose a slightly lower import price in order to leave some of the margin in China so that you can cover costs locally. Now, one of the benefits of that is a lower import price means that you pay less duty. Obviously, the VAT ends up being the same, but you end up paying a little bit less duty. But it means that more of your money stays in China. So really, it depends on the degree of operations that you have in China. Now, so there is some flexibility on the import price that you set for your goods, but again, within reasonable bounds. Just the customs in China, they keep a record of, for your HS code, what were the previous price ranges used. But more importantly, they also keep a record of you as an importer of record, what were the previous prices that you used for this given product category. So once you set a price, if you're importing the same goods multiple times, you can't fiddle with that price too much, especially if you start dropping the price. So you need to have a little bit of a long-term plan to think, okay, the price that we start with needs to be the price that we stick at, because I mean, you can have changes, maybe 10, 20, even 30, 40, 50%. But if you're doubling or halving, or suddenly the price is a tenth of what it was, that will be picked up with customs, and you will be accused of under-reporting the value of the goods and underpaying on tax. Also, an important point to mention, this is a relatively recent rule, and it's something that actually caught us out in the past, is there is now an expectation of whatever goods you import into China, you need to pay for those goods within 3 months. Now, some product categories, it's even more onerous. For example, a friend of mine imports cars, and after the explosions in Tianjin port last year, they changed the rule to 2 weeks. And what that means is if you import cars into China, regardless of when you sell those cars, you have to pay. So you have to pay the foreign supplier of those goods within 2 weeks. Otherwise, you can't pay them at all, which means that your money gets orphaned in China, which is a really, really difficult problem to get saddled with. So, and the reason for this is, people have messed around with this one in the past, whereby they'll import goods and they'll have the goods sat there for a year or 2 years, and then they'll export the goods to bring the foreign currency in. And there's all sorts of funny shenanigans that have gone on. So they've made this rule 3 months, which actually is quite a challenge sometimes, particularly if you haven't received payment from clients. So that affects payment terms that you have if you're selling the goods onto distributors and so forth. So it has a significant cash flow impact. The next point to talk about a little bit is around picking your port. Again, this would sound like a really obvious topic. Well, wherever the market is, you pick the nearest port, right? And to a certain degree, obviously that is going to be important because of the logistics costs downstream. However, it isn't always that simple. I mean, we have had examples whereby a particular relationship with a particular inland port has meant that we've had goods imported into one port and then trucked by bonded warehouse to an inland port hundreds of miles away, because there was a relationship there that meant that the importer was confident to be able to get the goods through customs. Some of the southern ports famously give a little bit more leeway on things like which HS codes you can use, or particularly, and this is the really important one, if you find a good importer of record, like somebody that can consistently get your goods through customs without any delay, those guys are worth their weight in gold. And often it pays to just choose whichever port they're at, rather than going to a port that's maybe closer to the markets. In the customs clearance agents, it's kind of a very fragmented business. So even companies that offer the service of doing customs clearance across all the ports of China, in truth, a lot of what they do is they subcontract and delegate down to these very local outfits. And a lot of these customs clearance agents, they're guys that maybe worked in and around the port themselves, or they've got relationships with people in the ports, and they tend to be quite local affairs. And also, they tend to be very product category specific. So a lot of people will choose their port really based on guys that can get stuff through the port rather than necessarily geography. The next, an interesting development in the past couple of years is we've seen the emergence of free trade zones. Now, the nature of a free trade zone in China is essentially what they do is they move the border from a customs perspective. For example, if you bring goods into the free trade zone in China, when you first bring goods into the free trade zone, you do a pre-import declaration. So the goods are on Chinese soil, but they actually haven't entered China from a customs and tax perspective. And the advantage of that is it allows you to get the goods close to market so that you can guarantee local delivery times, stocks kind of in country, but you haven't paid the import tax on those goods. You can wait until they're sold through before you pay the import tax. So for example, in some e-commerce situations where you've got goods on a website with certain guaranteed delivery times, this can be advantageous. Now we've started using this recently, and we were impressed with this as a policy, as an idea on paper. However, we've discovered that it has a fatal flaw, and quite simply, every time you clear customs, there is a fixed cost of doing that, right? So you've got to have stuff unloaded and reloaded. You've got to pay a customs clearance agent, picking and packing, all that kind of stuff. And what we found is that just that cost of customs clearance, the fixed cost every time, mean that if you bring in one shipment that then gets broken down to multiple clients, which is typical in an e-commerce sales situation, the cost of all the customs clearance outweighs the cash flow benefit of not paying those taxes up front. So for example, we had a shipment of about £20,000, right, coming into the Shanghai Free Trade Zone. And of that, we ended up spending about £2,000 more than we would have done on customs clearance. So that's 10% of the value of the goods. Now, at an average of 1 to 2 months of stock sat there in that warehouse, 10%, that's not worth the cash flow benefit of the tax savings that you would make. So it is an opportunity there, but it also depends how much the goods need to get broken down to their end users, and whether the cost saving from a tax flow perspective of the input taxes outweighs the increased costs of customs clearance.
Andy, can I just interrupt you on that? I personally have a question for you based on your experiences, and it's definitely a question that is raised a lot by my clients to me, but I don't have that physical experience. What do you tell clients, the whole topic of e-commerce and the whole topic of free trade zones and what you can do in them, there's so much more advantage. How do you, besides this customs clearance cost issue, what other benefits does the free trade zone have? I mean, is customs clearance that much faster? Are things more efficient in the free trade zones? These are a lot of questions that I get from my clients where I personally, obviously being a management consulting company, we don't have these types of experiences. So I'd be interested to know from your perspective and with the trade transactions you've done, what you feel.
There is no real speed advantage of the customs clearance itself. So that's pretty much the same. In fact, you have to do it twice, right? Because you've got to do this pre-customs declaration, then put the stuff in the warehouse, and then when you sell them onto clients, you then need to actually go through customs clearance. So it's not a doubling of workload, but there is extra workload from the pre-clearance declaration. But so the comparison point, right, is you bring goods into a warehouse in regular mainland China versus free trade zone. Now, if it was regular mainland China, you would only customs clear once. And there's actually an advantage to that because there is a fixed cost each time you clear customs, and there is some workload involved in that internally. Obviously, the disadvantage is that you therefore have to pay all the import taxes and duties up front. So there is actually, if anything, an efficiency loss rather than an efficiency gain of using the free trade zone, which I know sounds a bit counterintuitive, but that was our actual experience.
Right. And are warehousing costs more expensive in these zones versus outside?
A little bit. I mean, not hugely different. There's the one in Shanghai, which is, we set up a company in the Tianjin one, which was really quick, actually, a local company. There was advantages there in terms of speed and efficiency of setting a company up. But we've only actually done the logistics stuff through the Shanghai one. And the warehouse and logistics setups there are, of good scale and pretty efficient. But they do charge a little bit more because there's less competition than there would be for regular local mainland warehouses.
Right, understand. Okay,
I mean,
thank you.
The other touted advantage of the free trade zones is some of the scope and areas of business that it allows you to do, which isn't strictly to do with import-export. And to be honest, I think a lot of those benefits still are, everyone's kind of waiting to be seen. So if you want to do all the regular stuff of a WFOE in China around paying staff and taxes, the actual registration process ain't that different to a mainland one. So yeah, I think we're waiting to see really what the advantage is. They seem to me like test beds for experimentation for the government, rather than something that is really and immediately advantageous to companies entering the market.
Right.
That would be kind of my headline conclusion of them. Okay, so just a few more words around customs agents. So I've mentioned this already, is that these guys really are a very important piece of the mix. One thing to be just real clarity around who's who in this. What a lot of Western companies do is that they appoint an agent of theirs in China. And by agent, they mean somebody who purchases their goods in China, finds business for them, sells on to distributors. So that would be, in the import-export parlance, that company would be the importer of record. So, for example, my company is the importer of record for quite a large number of Western brands. So the definition of importer of record is the company who imports the goods. So it's their business license that is used as the importer of record. Now the customs clearance agent is a different group of guys. These are the guys that actually take the documents and the paperwork from the importer of record and from the exporter overseas and go and do the paperwork and the handover of documents with customs. So they're the face-to-face guys with customs. So they're really important, because they're the ones that know what can get through, what works, and also in some cases have the relationships to ensure that stuff does get through. So picking guys, and again, the real trick to this is to find people that have done your product category. So for example, we do some work in health and beauty. We've found one particular customs clearance agent, and oils is one that we do, health and beauty oils. And they specialize in this product category. That's just what they do. And working with those guys has been incredibly beneficial, because if you try to figure a lot of this stuff out yourself, the errors are expensive. So if you get it wrong, what happens is your goods end up stuck in customs, and then you get charged storage. And then a holiday comes on, and you get charged storage for the whole holiday, and it kind of exacerbates and exacerbates. So there's real benefit in finding guys who can get it right first time. And one important point to remember in this is, don't assume that your logistics company in the West will appoint a customs clearance agent that knows what they're doing for your product category. Because a lot of the logistics companies, they have set contracts with certain customs clearance companies. And it's so granular in terms of product knowledge at customs in China that actually it's worth shopping around and finding people. And you're free to do that as the exporter. It doesn't mean that because your logistics company say that they are going to appoint this customs clearance agent that you have to use those guys. You can go and pick people yourself. So don't necessarily assume that the logistics company is using the right people first time.
So Andy, a question just came in directly on that topic. How do you find customs agents, and how do you know if they're the right one?
Mm-hmm. Yeah, I mean, this is where a little bit of local knowledge and ability comes into play. This is, for us, is an easy one. Our import-export manager used to be a customs clearance manager at FedEx, right? So he kind of knows everyone that they run it. And it's like any industry, there's a network of connections of people that know each other. Now, on a sort of a broader level, if you've got staff in China, you can do internet searches, and you can look them up. Often we find the best way to find customs clearance agents is to spend a little bit of time at industry fairs or speaking to wholesalers and distributors within the industry. And sometimes this requires a little bit of buying people lunch here and there, but with the specific agenda of asking that question, so who did you use for import? Can you introduce them to me? Because it's the guys who are the distributors and wholesalers in the industry are typically the ones that have the relationships with those good customs clearance agents. So sometimes it is actually worth spending a bit of time with people that have been in the industry for a little bit of a while. There may be some co-opetition relationships with those companies. But for example, again, back to this oils company, our client spent some time wining and dining other companies that maybe were serving a different geography or a different customer group and saying, could you introduce us to your customs clearance agent? And that relationship is sometimes quite closely guarded because people realize the value of it. Okay. The next topic is, and this is something that you see across a bunch of different industries, is around making your product in China. Now, this is very much in inverted commas. So, for example, we have a client that sells peas and beans, and again, it's not a very high-tech product, right? But you can either sell the product as the dirty product, if you like, which means that it's big ton bags that haven't been cleaned and bagged, or you can sell it as the already processed product, which has been cleaned and bagged into sort of 10-kilo bags. Now, the big difference in this case is that you can the costs, the declared cost at import is much lower for the dirty products. You save on import duty. However, if you export if you import the dirty product into China, you then need to have it cleaned and bagged. And we have several clients that we serve in this way, whereby we bring in some form of raw material for their product, which then goes through some kind of, and it's typically more repackaging than reprocessing. And it either allows them to say that it's made in China. So a good example of this is in health and beauty, where you have animal testing. So if you bring in finished goods beauty products into China, they need to be animal tested. And that, for a lot of companies, presents an impasse. They're not going to do that, right? But if you bottle the product in China, then it's bottled in China, or like I say, quote unquote, made in China, and therefore you don't need to animal test. Or in some cases, actually, you can declare it at a lower import duty or use a different HS code, and so you avoid some of the import and tax restrictions by doing that. And this is something that you see, you see this huge in the car industry, where for many years, essentially what people were doing was exporting unassembled cars into China and assembling them in China, and that way getting around the rules and the taxes for bringing in fully assembled cars. But that idea, that concept, actually works across quite a lot of product categories. And maybe the energy drink example that I gave early on might be, this might be the only way that they're able to access the China market, is by having some kind of a bottling function in China. Okay, so documentation obviously is at the heart of import-export in any country, and especially in China. And typically you see there's sort of three levels of documentation. There's information around the importer of record, which is the importation company, like somebody like me or your WFOE if you have an entity in China. Then you've got, and that's things like the business license, proof that they have got the ability to import goods. Then you've got all the documentation around the goods, so things like the packing list and bill of lading and the contracts. And then, and this is where the long tail is exceptional ones. So, for example, there's a lot of products that might require phytosanitary, or they might require 3C. Now, and this is where people kind of get really stuck. You have to be prepared in China for what is essentially it's shenanigans around sort of import restrictions and trade war, really. But for example, in Europe we have quite high quality standards, like ECE quality standards. They're not recognized in China. They have got their own quality system. So, for example, there's the 3C quality. So this is often a point of frustration with companies that are looking to bring goods into China. They say, well, I've got all these international certifications. Why can't I use these? And the Chinese, for all of their own reasons, say, well, we've got our own system here. A really interesting example of this, and one that catches people out, for example, and this is food and beverage, is labeling. So if you can import your goods into China without labels, but to actually sell them in China, you have to have a correctly translated label. And the FDA in China are exceptionally picky at the translations of these labels being accurate, right down to the level of detail that if you put that little R in a circle, meaning registered trademark, if that's in the wrong place, they'll send it back to you, and another week will go by that you can't sell your goods. So we spend quite a lot of our time in this category of exceptional. Also, one thing to bear in mind is some of the documentation is for the importer of record. So, for example, if you want to sell food, beverage in China, the importer has to have certain licenses around health and safety. So they have to have their warehouse checked and supervised, things like that. The goods themselves need to be registered, which means things like what's called the health certificate for each individual item of goods. And then you need all the documentation from the West in terms of phytosanitaries and all those things. So even with an exception, you can have layers of documentation required. And like any specialist area, it's something that just requires to be gone through in a level of detail of whoever's bringing the goods in. Next one is
Andy, there was a question that came in that I think is quite a interesting, debatable question. Do you consider the certifications that you just mentioned, the 3C, the Food and Beverage, Food and Drug Administration license, as trade barriers for companies trying to import into China?
Yeah, you're right. It is a debatable question. Now, from China's point of view, China imports stuff from all over the world, right? And if you take this whole melamine scandal in powdered milk, and they have a duty to ensure that the goods that they bring in meet national standards, and that's well and good, and as it should be. So, and I don't think any of us can argue or disagree with that. Do they use that concept to put up trade barriers and make it difficult for people to bring in goods and therefore protect certain industries? I believe they do, yeah. And I think if you talk to anyone in any particular industry, that they would say that is the case. But obviously, that's way above our pay scale, right? That's all to do with international relations and the games that go on between countries.
Right. Thanks.
Debate later. The next one is something that's not immediately obvious to people, but it's around timing. And the whole Chinese bureaucracy, the whole system works to cadences and rhythms that truly are quite mysterious to people from outside. So, for example, we're based in Beijing, and every time Liang Hui, the sort of the two parliaments meet, like certain roads get closed off, and no one really knows why, and it's kind of mysterious. And the same is true of customs. So, a friend of mine, he sells kitchen equipment, and he often has to bring knives in. And so he had a shipment of knives that were coming, the same knives that he always brings in. And because there was a high-level security meeting of leaders, his knives got held up for 6 months in customs. And not because he'd done anything different or there was any change in policy. It's just there was some kind of an internal political movement going on, and somebody said, right, well, we need to stop that now. Now, yeah, that sort of thing is exceptional. However, a lot of these product categories are open to interpretation, and these things, they do happen. It can be, sometimes the reasons that you get for things are a little bit baffling. On a more practical level, you need to be aware of the holiday schedule in China. So, don't, whatever you do, try and get goods into the country anytime around sort of late January, early February, because you'll just get caught in this backlog of CNY. And as I mentioned before, if your goods arrive during a holiday, or if they're there during a holiday period, you get charged storage for that whole period, and it's just a mess. The other thing to bear in mind from a timing point of view is, we all promise and we all do our best to say, we'll get goods through first time. In truth and in experience, it doesn't always happen that way. And I've had situations where I've had clients, sat in hotel rooms waiting to install kit for a week or two, just kind of twiddling their thumbs. And so always set expectations a little bit low. Say, look, this could take longer than we anticipate. You have to be prepared for the level of bureaucracy involved, and there's no guarantees. In the West, you have this expectation whereby, okay, what are the rules? The rules like this, we do this, it'll all work fine. And mostly in China that is the case, but it's not as reliable. It's not as predictable, maybe is a better word. So, have expectations accordingly. Incoterms system, I'm going to assume that everyone's got a sort of working knowledge of terms like FOB and CIF. But one thing that we see, sometimes people getting a bit confused around is specifically what's included in what. So if goods are quoted as being ex-works or FOB or CIF, quite who's covering what. So you just got to make sure that you've got clarity between yourself and the exporter of who's covering which bits. We have a little chart here that shows if you are running an entity in China for goods that are either ex-works, FOB, CIF, or DDP, what your local team in China would actually have to do in each of those situations. So obviously, ex-works and FOB is going to be higher workload on the China team. So you only want to move to that kind of a situation once they've got some experience, whereas DDP leaves most of the heavy lifting with the exporter and their logistics provider. So you want to make sure that you price things accordingly, so that your team are able to cover the relevant functions. And yeah, one thing to just, I suppose, finish with, which is the mindset. Doing business in China is a lot of fun, and it's a challenge, and it's the Wild East, and that sort of thing. And it is a phenomenal place. It's a great market, great place to do business. However, stuff does go wrong. Things work in quite a different way, and customs is no exception. In fact, customs is probably the very epitome of doing business in China. And to do it right, you need to be prepared. You need to put in a lot of work on preparation, but you also need to expect that things not always go to plan and maintain a sense of humor throughout the whole process, because it can throw up unpleasant surprises. Right.
All right. I will just take the control, Andy, for the Q&A slide. One moment. There we go. So Andy, great. Thanks for the presentation. I'm really impressed. There are numerous questions that have come in from the attendees. So I think we'll just get started. And a few attendees have brought up the question of wanting to understand the particularities, the requirements, the procedures, the costs for importing foodstuffs and wine. Maybe you could provide a type of case study on the ease or difficulty it is to import that category of goods.
Yeah, okay. So food and beverage, we do quite a lot of work in food and beverage. So the first thing is to look at the company that's importing, the importer of record. So obviously they have to have import-export on their business license, and they have to have selling food as a category that's included on the business license. And if it's not there, then you need to go and apply for it. Next is that the company needs to go and apply for a 食品流通许可, which is the ability, the right to actually sell food in China. That involves an inspection by health inspectors, and they'll come in and look at the warehousing facilities that you've got and the products you've got and whether everything is stored. It's a little bit of it's a slightly pointless activity in truth, but it's something that it's a hoop that needs to be jumped through. You can subcontract a warehouse in order to apply for that, but it just takes a bit of time to get that done. Then, in terms of the products themselves, this is where what I was saying before about each category being very different. Before you do any of the other stuff, figure out what the HS codes are for your particular product category and make sure that they can be done. And that involves a discussion with an importer of record. And like I say, you've got to get as specific as the actual ingredients. So what we typically do is we'll say, send us through a photograph of the actual ingredients on the label, along with pictures and descriptions and samples of the photograph, and then we'll go down and talk to various import agents, and like I say, we'll get down to the specifics of the ingredients of what's in there and see if it can and can't be done. There's not really very much value in me saying right now which products can and can't be done. So, like I say, energy drinks can't, but boiled sweets can. Tea and coffee can, wine can, with certain restrictions, but certain types of tea, if they have a certain type of rare metal in there, can't. So it really is that detailed. There's no general blanket answers to things. Right. So then, first we'll check that its product category can be done. You then need to have the product itself registered. So typically, what this involves is before you bring in the main shipment of goods, you do a little pre-shipment, also almost like a sample shipment, and they have to spend about a month going through testing. And this literally is, the customs guys will take it to a little laboratory, do all sorts of testing, and make sure that the actual constituents of the product are what they say they are on the labels. Also, at that point, you have to have your labeling sorted out, and then you'll get it's called a Weisheng Shukla, which is an actual approval for this particular product to be brought in to the country. Once you've got all those things in place, you can then start importing. Now, there are a few documents that are required every time. Like I say, phytosanitary, it's a little bit different for different product categories, certificates of origin, and those sorts of things. The whole process, if you're starting with a WFOE without the licenses and products that haven't been registered, you're talking 3 to 6 months to get all of that done. But once it's done, you can bring the goods in and have them for sale, and it does actually work. I mean, as you can see, there's quite a lot of imported goods for sale in China these days.
Right. Thanks a lot, Andy. The next question. Sorry?
That was the long, detailed answer.
Yes. Well, I don't think so. I think there are a lot more details that still need to be considered. But, I mean, I would say to all the attendees, if you have specific questions, please contact Andy directly. And as you can see, LNP, they do have experience in importing these goods. Andy, the next question is in relation to free trade agreements and importing goods based on free trade agreements. What is your experience on that? Are free trade agreements actually useful, or are they more of a political ploy between countries?
No, sure. No, free trade agreements are a very, very useful one. So when you pick the right HS code, what you do is you go into the. Are you able to scroll back? I think I've got a slide on HS codes, and there's actually a link to the customs website, IMMA. And if you go in there, what you find, and you put in the right HS code, is that they show all of the documentation that is required for your particular category, but they'll subdivide it as to whether you are a country that has free trade agreements with China or not. So you see all these categories of different levels of country. Now, obviously not for every product category. It has to be product categories that have got these type of agreements in place. And then there are preferential rates and documentations for goods coming in from certain countries. Now, obviously, you have to have a certificate of origin from those countries. But no, certainly, China honors its commitments to those international agreements.
Okay, then the next question is in relation, because your presentation was focused on importing goods into China. One of the attendees is asking, what happens if you're already producing in China, which most people are. They're already producing consumer goods, and they now are looking to sell.
That's a great question.
And obviously they don't have an entity in China yet. And I mean, I get this a lot with my clients as well. We don't want to take the risk to set up an entity if we only have one order. So how do we buy and sell locally?
Well, here I'm sorry. I'm gonna switch to the hard sell. We have a very specific service for exactly that situation. So it's an agency service whereby we manage that transaction for you. So we sign a sales contract with the client in China, issue them a tax invoice, collect the payment, and then similarly we sign a purchase agreement with your factories in China, pay them, and then we repatriate the profits, the margins of that transaction. So we actually have a service directly for that. The alternatives for you in that situation, so what a lot of people look at is kind of exporting and re-importing, which is a really high cost, high workload way of doing that. The alternative, like you say, would be to set up a WFOE, but that often doesn't make sense if you if you're starting with one deal. So the answer to that is the best solution is to find some kind of agent or a partner in China who has a WFOE, and there are people like myself around that offer this as a service that can do that transaction for you. Our experience on those kind of transactions is that there's quite a lot of education required to the finance team of the company in the West, because they just don't get how VAT and taxes work in China. So you've got this thing called a FAPR, which is actually a physical printed invoice that needs to be sent from one company to another. And that all requires a little bit of explanation. Also, people tend to screw up the taxes a little bit. So when they quote the price to the client in China, it's worth figuring out how you're going to do the deal first before quoting the final price, because you've got to make sure that you've got the local VATs and things like that included in it. But yeah, we have several clients that we've done that exactly type of operation for. And other people that we've talked to about this that haven't used us, I think what they've generally done is they've found kind of partner companies that are willing to put that transaction through their books on their behalf. But in that situation, if the partner company is somebody who's got an involvement in the industry, then they don't necessarily want to let that company know what their sales and cost prices are, or lose control over the transaction. So sometimes having someone that you can control in that transaction is a valuable benefit. We've seen this more and more, by the way, which is why we market it as a service. A lot of people making in China now have opportunities to sell that.
Right. The next question I have, Andy, is in relation to companies that are looking to import goods into China, sell into the Chinese market, but also export and sell into the Asian region. In relation to this mix of sales channels that are occurring between regions, is China the right place to have a hub for stocking goods? And what are your experiences in terms of customs clearance and export for what needs to then be sold outside of China?
Okay, yeah, that's a great question. So when you're exporting goods out of the country, one of the benefits of exporting is that you can take any VAT that was paid on either the importing of the raw materials or the supply of raw materials to those exported goods, and you can apply for a tax rebate. So, and typically, the rate is 17%. So, if you've bought raw materials from local suppliers and they've provided you with tax invoices, or you have imported raw materials or parts for fabrication and then re-exported, you can use all of those VAT invoices and you can go apply for a tax rebate, which means that the cost of the transaction is kept under control. I would say tax rebate applications in China in themselves are quite a hassle. You have to do it right. So, for example, the product categories have to match up, so that the goods that you're exporting have to show the specific product category of the tax invoices that you're using to reclaim. Otherwise, they won't do it. And you typically don't get to see your money for about 6 months later. But a lot of companies do use China as their manufacturing hub and bring stuff in. In terms of whether China's the right place for you or not, that really depends on your industry. What are the costs of production and the cost of raw materials in China versus other countries in the region. I mean, we are seeing some industries sort of moving to other countries in the region, but China seems to have a great ability to hold on to a lot of these export industries because they create such a critical mass of suppliers. I mean, the way the industry works in China is you tend to get these clusters, like incredible clusters. Like, if you want to have toys made, you go to a town that makes all the toys, and in the little towns around, there's a whole town that makes the eyes, there's a whole town that does the plastic modeling, there's a whole town that makes hair for toys, and you get this incredible specialization. And typically people find that the skills and the supplier bases of those manufacturing hubs are worth it, even if the cost of production is slightly higher than other countries. But obviously it's dependent on the particular industry.
Right. Andy, I think we're going to end there because all the remaining questions from the attendees were very customer specific. So I do want to tell everyone that the questions you did submit will be handed over to Andy, and I'm sure he will be more than happy to reply to you directly, especially for those questions that were very much specific to your own companies and your own experiences in terms of importation and sales into China. So Andy, you will be getting those questions from me. On our presentation are both Andy and my contact details. So for those of you who didn't have a chance to ask questions, or you are going to ponder now after our webinar session what you may want to ask us, then please don't hesitate to contact Andy or myself. Andy, thank you very much for joining us today, for presenting and asking all of these questions from the attendees. Thanks a lot for your time.
I love doing it. Thank you very much indeed, Christina.
And just a note to finish off the webinar session today, we do have another 8 webinars in this webinar series. If you haven't subscribed yet, the webinars are complimentary, and all the topics and dates and times can be found on our website, and you're more than welcome to subscribe via those registration links on our website. Last but not least, all the attendees and registrants, even those that weren't able to attend today, will be receiving the presentation as well as the recording. The recording will be uploaded to our social media sites, so you're more than welcome to forward it to colleagues, friends who may be interested in the topic. We also have a weekly e-campaign that is sent out to our database, and if you're interested in subscribing, again, it's complimentary, and it highlights all the types of resources that we issue on a weekly and a monthly basis. So we hope you all enjoyed today's webinar session, and we look forward to seeing you all again very soon. Thank you for joining us, and have a pleasant evening. Goodbye.